Owen, hello to you. Thanks for your time, looking into your crystal ball for us this morning. So it's expected that the growth rate going to be somewhere between 2.5% and 3%. Off the back of last year, though, and COVID-19, it's quite difficult to believe. Help me understand.
Thank you for having me, Gareth. It's an important day, obviously, for us. We need to see how the country has performed in the first quarter of the year. That number out at 11:30, we're looking at a growth rate of 2.6%. But if we're looking at it on an annual basis, we're still expecting there to be some drag of some 3% on the downside. So, yeah, the number 2.6% that we're hoping for, and I think that the advent of load shedding hadn't been that aggressive, in my view, relative to where we are at the moment. So I do think that we potentially could see a print of about 2.5% coming through to 2.6% in the first quarter of this year. The second quarter is one where I do think that there could be challenges, but I do think that the president takes with him to the G7 an environment that's a little bit more hopeful than last year was for us.
It does bring into question, though, about the real terms of these numbers, though, doesn't it, Owen? Because while you're suggesting perhaps 2.6%, it's bang down the middle of the expectation, 2.5% to 3% growth for GDP in the first quarter of this year. It comes off the back of that 7% contraction last year. So are we talking real terms, growth of 2.5% to 3%, or relative to that 7% contraction last year?
No, this is relative to the first quarter of last year. Obviously, that's a comparison that we're making, and we need also to remember that we were coming off a very low base. Yeah. We were not used to these sort of digits before COVID, because the economy was really struggling. So we need to always keep in mind that we're coming off a very low base because of the COVID environment.
Commodity prices seem to be making a big difference as far as our GDP is concerned. Also, global demand for also being one of the biggest drivers. Now, how does that help us in GDP, and how do we keep that ball rolling for commodity and global demand for the growth of the economy?
Yes, commodities are playing a very big role in South Africa's recovery in terms of the GDP. We've seen, platinum, gold, all the precious metals doing well. And that is obviously feeding into the GDP number as a total. But remember that last quarter, there was reported with 8 out of 10 sectors all performing positively. Trade, manufacturing, and agriculture and all of those other sectors had a decent showing. But mining is certainly worth mentioning because of the direct pricing that we see in the commodity space. China is gobbling up as much of these commodities as possible as they continue to recover as well. Supply from South Africa and Australia and China and other countries not nearly enough to meet the current demand and the perceived future demand as countries continue to get out of this low environment of operation economically that was caused by the pandemic, Gareth.
So, Owen, final question to you. We know that the President, Cyril Ramaphosa, heading over to the UK for the G7 summit. There we go. I finally got it correct. I didn't stumble over G7 summit. To try and lure investors. If we're looking at some 2.6 to 3%, you're suggesting 2.6 growth for GDP. Yeah. Is that something he's going to put on the table as a selling card, saying to investors, yes, we had 7% contraction. We were in the red last year. We're coming back at 2.6. Give us more of your money. Is that how he sells this? Final question.
Yes, I think that's how he's going to sell it, and he's also probably going to check the relatively positive changes coming out of Eskom, with their financials looking much better, with the guys starting to address their debt much better. Their SABC also, the numbers also looking better. There's one of the parastatals that have been problematic in the country. I think he's going to check with them that carrot angle and say, we've got a strong currency. We're starting to have our public enterprises reversing their recent losses. So we believe you can trust us. And this is, the proof is in the pudding, as it's going to take some of these indicators that I'm telling you about. So we do hope that at least he gets to convert those pledges for investments, and they do get to be invested in the country, and we reverse our unemployment, Gareth, which is obviously a very big concern for us.
It really is, but at least we have the 2.6 to 3% carrot to try and dangle in front of investors. Owen Nkomo, thank you very much indeed for your looking ahead to the GDP numbers coming out. So bang down the middle, expectations 2.5 to 3%. Owen Nkomo, economist with Inkunzi Wealth Group, suggesting it's going to be 2.6%.